And if I look at when we spoke sort of, I think it was at the start of the year, you were talking about how you're concerned that there was potentially a, hiccup in liquidity. There might have been it was decreasing. And it sounds like the Fed's actions are sort of the main thing that's sort of improved that, I guess, recently. Would you agree with that?
Yeah, I think that what you've seen is a technical move from the Fed. I mean, the fact is the debt ceiling. This is all to do with the debt ceiling, and the fact is because the U.S. government hasn't been able to issue debt, they've had to run down their balance sheet. Now, part of the concern we've got in the second half of the year about what the Federal Reserve does is an implicit assumption, which is actually taken from their stated policy, that they want to get the Treasury General Account rebuilt in the second half of the year. Now, given the fact that the Treasury General Account is now circa 450 billion, and their assumption is they want it back to about 850, that would be about 400 billion effectively taken out of markets if they do that, which is clearly a sizable sum. I mean, that would get US bank reserves below $3 trillion again if that was the case, or that alone happened. So these are sizable amounts, and that's really the uncertainty that we can't be sure about. But on the other side of the ledger, so to speak, or the other side of Washington, what you've got is the government, the Treasury, is basically undertaking funding, or will be undertaking funding now that the debt ceiling is more or less resolved, I suppose. They're going to be undertaking funding much more at the short end of the market. And even though Scott Bessent, through some virtue signaling, was actually suggesting that his Treasury would be, let's say, more open to coupon debt issuance, in other words, longer dated duration issues, because he sort of scolded Janet Yellen for cheating, so to speak, with a lot of short-term debt issuance through bills and very short-dated coupons. It looks like he's going down the same path. He's being forced to follow that. So, that actually is a sort of backdoor way of injecting liquidity into markets.